We have the European Central Bank essentially calling for an integrated European market for digital assets, or digital capital markets union, in a brand new document. We have the European Parliament calling for a multi-trillion-dollar stablecoin market cap by 2030. Sounds familiar. We've got XRPL potentially taking 14% of SWIFT, and much more. Genius Act just passed yesterday. Buckle up. So this document just came out the 16th of June. This is modernizing central bank money in response to digitalization and fragmentation. This is coming out of the European Central Bank. This is a member of the executive board within the European Central Bank. They're talking about current challenges. They're aiming to modernize central bank money in response to the transformation taking place in payments and finance. I'm not going to read through this whole thing, but I'm going to highlight maybe a couple of main points and just say, the writing is on the wall with this technology. It's not these like niche use cases at this point. We've seen RWA tokenization, or real world asset tokenization, take off over the past year and a half. And that's been going on for years, by the way. Tokenization has been going on for years, but really just a ramp up over the past 12 to 18 months. And I don't think that we've seen anything yet as far as where this space goes. So internal leg of the European Central Bank, their main area of focus is the digital euro and new technologies for settlement of wholesale transactions. I'm not going to dive too deep into the digital euro here. They're laying the technical foundations for the potential issuance, as we've seen for a while. Did a video on Quant and some of the other players a couple of weeks ago when the initial kind of technology partners were announced. What I do want to get into is new technologies for settlement of wholesale transactions. We've seen a total rhetoric shift to the point where they're literally talking about, publicly talking about literally, implementing distributed ledger into the financial architecture, into all of these traditional rails. So it's not just kind of this crazy deep divey documentation and speculation. It's literally like in the documentation, they're pretty much telling you what's coming. There's been a significant increase in the adoption of fintech, or financial technology, particularly distributed ledger tech and the digital representation of assets on programmable platforms, or tokenization. And here's the rhetoric shift. DLT can enhance efficiency, trading, settlement, custody, 24/7, 365, smart contracts to automate speed up processes between issuers and investors. A shared distributed ledger technology platform could lower barriers to entry, et cetera, et cetera. So here's what I found interesting in this document, because a lot of this stuff is the same rhetoric that we've seen over the past year, right? Next step, in the short term, European Central Bank coming out with a document saying that they're going to offer a platform for the settlement of distributed ledger technology-based transactions in central bank money through an interoperability link with target services. Interesting. Curious what the interoperability link is with target services. We know ECB is tied in with Quant. I'm doubting that they're, I'm sure you'll see rhetoric on this stuff, but I'm doubting that this is like an asset. This is a platform. This is like some sort of interoperability, maybe CCIP and some of the stuff Chainlink is doing. Really what's interesting, though, is because we know that this stuff's coming, like DLT-based transaction settlement and central bank money. Although I do think there's cascade effects when you start having central bank money interoperate with some of these ledgers, some of these blockchain ledgers. It's not like a crypto asset potentially, doing the settlement. What I think is more interesting here is looking further ahead, the Euro system will explore a more integrated long-term solution. So they're basically saying that all these implementations right now, this interoperability with the new, distributed ledger rails, isn't solving the long-term pain points, or at least the long-term solution needs to be more viable, more comprehensive. You literally have the European Central Bank right here saying there's an opportunity to create an integrated European market for digital assets. Digital Capital Markets Union is what they're calling it from the outset. Now, when you put into context here, what we're seeing stated from some of the legit blockchain and distributed ledger networks, some of the more reserved, traditionally reserved individuals, we have seen a shift over the past couple of years where some of the more kind of even reserved individuals saying that everything of value is going to be tokenized. and you kind of start thinking about the verbiage being used by an entity like the European Central Bank, an integrated European market for digital assets, or digital capital markets union, from the outset. For some context, here's where I use a little bit of AI to quicken the research stuff. The European Union's total bond market, including sovereign and corporate debt, is estimated at around $25 trillion, roughly 23 trillion euros. Only about 15% of that figure of non-financial corporate debt is raised through capital markets. The remainder relies heavily on banking. This highlights a massive untapped opportunity. The European Central Bank itself, via its exploratory target distributed ledger technology project, settled around 1.6 billion euros over 6 months last year. Meanwhile, over 60% of EU banks are actively exploring DLT. In 2020, 22% already use distributed ledger in some way, shape, or form. What this means: structurally integrating digital assets could unlock trillions in additional on-chain securities, tokenized instruments, which include bonds, equities, securitized loans, bridging a gap in Europe's reliance on banks versus markets. At a minimum scale, we've already seen billions traversing distributed ledger platforms. As adoption expands, this could rise into the tens or hundreds of billions. This is going to be trillions, obviously. Eventually unlocking a slice of, because what's going to end up happening, and this is what we've seen happen, and thank you, ChatGPT, you know, this is kind of a lot of the stuff that we're seeing right now, or like, or have seen historically, are kind of these proof of concepts. But we know that with clear regulatory guidance, once the technology has a foot in the door for the traditional systems, these traditional assets get tokenized, it's just a much more efficient system. Like, yeah, you know, and even look, you know, right now you're essentially looking at 23.9, and this number is probably a tiny bit low, $23.9 billion of RWAs on chain, real world assets, tokenized real world assets. When you start getting into the tens, hundreds of trillions, you know, you get up into the quadrillions with derivatives and stuff. This chart, like I've mentioned before, you're not even going to be able to see. This isn't going to look like a peak when you look at this 10 years from now. This is going to look probably something like this. It's going to look like absolutely nothing in a decade. And then to even put in context more, which is going to lead me into this next document, total stablecoin value right now is about $238 billion. We did that video a month ago. I did that video where I found the Treasury Borrowing and Advisory Committee estimating, you know, if all goes well, $3 trillion stablecoin market cap by 2028. That's like 3 years from now. Then they're literally saying more than a 10x within 3 years from now of stablecoins. And now you see European Parliament saying right about $2 trillion, which is like about a 10x, which I'll show you here in a second. So, you know, when you think about what this actually represents, yeah, it might be taking longer than most people anticipated, but at the end of the day, this stuff is 100% happening. Kind of leads me into the Ripple video too here in a second. But so they're getting into cross-border interlinking. This is still the European Central Bank document, leveraging the multi-currency feature of TIPS to settle funds, global cross-border payments, et cetera, et cetera. But I did just find, you know, this came out, I think, a day and a half ago. Opportunity to create an integrated European market for digital assets, or digital capital markets union, from the outset. It's probably the biggest thing that I've seen in here, and that just kind of leads you into where this stuff is heading. Yeah, they're working on infrastructure for a digital euro right now, but they know down the line there's a much more comprehensive solution. Like, and we've seen this in some of the documentation. I think it was a Bank for International Settlements document I found like a couple years ago, where they talked about essentially this already. They're already being kind of a parallel distributed ledger rails. And, you know, that was a couple of years ago. So it's going to be really interesting how this stuff kind of shifts and the overlap on these distributed ledgers and blockchains. So I found this as well. This just came out, I think, over the past day or so, couple days. U.S. digital asset strategy and the European response. This is a European Parliament response to everything going on in the U.S. right now. I'm not going to read a 37-page document for you. But I do want to kind of touch base on maybe a couple of things. We know the Genius Act passed in the United States yesterday. So what does this potentially, you know, get into here? As we write, so this is, I found an issue here essentially with the current regulation. Yeah. If the version of the Genius Act recently approved by the Senate, and we know that it was just approved yesterday, So this document came out right before that, which is significantly crypto friendly. So the Genius Act that just passed is significantly crypto friendly. Will be approved by the House, which it was essentially intact. Then that version should probably constitute the core of the forthcoming legislation proposed by the new President Working Group on Digital Asset Markets, et cetera, et cetera. But what I really want to get into here is this figure. Let me see if I can blow it up for you guys. Current projections confirm this will indeed be the case. Figure 5. So this is an image taken from Citigroup, and this is a different image than the image I found a month ago coming out of the United States Treasury. The Treasury Borrowing and Advisory Committee presented a document to the U.S. Treasury on stablecoins. And I mean, these are members such as JP Morgan, BlackRock, Fidelity, maybe not Fidelity, Franklin Temple. There's like huge entities. I know BlackRock's in there. I know JP Morgan's in there, and there's just a bunch of others. They estimated $3 trillion by 2028 if all goes well. Now you have Citigroup and the European Parliament referencing this image, estimating the stablecoin market size by 2030. This includes a couple of different things that would have to happen within these figures. So you essentially have $3.7 trillion is the bull case for stablecoins by 2030. For that to happen, they're essentially saying you need 1,682. They're essentially saying a partial reallocation of USD banknotes held domestically and offshore, partial substitution of international short-term liquidity, and stablecoin market expansion driven by higher adoption of crypto ecosystems and higher cryptocurrency trading activity. Here's what we're looking at right now: 863. These are in billions down here. 8 billion in 2020, 63 billion in 2021, then 188 billion, then 132, then 150, now around 234. The actual number right now is 238 billion stablecoin market cap. They're saying essentially, 3.7 trillion by 2030 bull case, 1.6 trillion base case, and the bear case is, a little over double where we're at right now for stablecoins. And I do think that what we're going to end up seeing is if you correlate, total stablecoin market cap to total crypto market cap, I forget what the number is. It was like 7 to 9% or something like that when I looked at it like a month ago. But what I think is more interesting there, and I think that stablecoins will start taking more of the lion's share of market cap. Maybe they end up somewhere around 20, 25%. Maybe that's too high. Think about what that means if stablecoins in the bullish scenario are at 3.7 trillion, what that would have to mean for the overall crypto market, non-stablecoin based assets. Even the base case at 1.6 trillion. The total crypto market cap is probably like 3.5 trillion right now. Just think about what a $1.6 trillion stablecoin market cap would have to represent for the full crypto market cap. It would have to be obviously a decent amount higher than 3.5 trillion. So found this, some of these documents really interesting to see this coming out of the European Parliament alongside this document from the European Central Bank about this integrated European market for digital assets, or a digital capital markets union. I do want to kind of run through a couple of things here. So one thing I kind of think is interesting, and I think that there's been a lot of frustration kind of from like individuals that are in kind of these utility driven, or what we perceive to be utility driven ecosystems. And I just find it so crazy. Like, stuff's not happening as fast as we want it to happen, all this other stuff. You go to CoinGecko, and I remember a time 4 years ago where we weren't even close to 10,000 cryptos on CoinGecko back in like 2020, 2021. And this is much lower. Like, coin market cap is probably a more accurate representation. I remember when in 2020, late 2020, early 2021, the number of cryptos on here was right around 12,000 on coin market cap. You wonder why we don't see like utility driven ecosystems doing what we expect them to do right now, or the underlying assets. Like, it's because there's 17.29 million cryptos on coin market cap right now, and 98 to 99% of them are just never going, yes, they're going to do whatever they do speculatively in the short term, but they're not going to be around 20 or 30 years from now, or at least in any meaningful way. So I think it's kind of like this just crappy patience game that we're all kind of watching. I mean, here's a good example. Here's an article from Coin Central saying Ripple CEO says XRP will capture 14% of Swift's volume, which he didn't say. I think he's, what Brad said, I think was actually XRPL, but we'll go through that. But then here's like the same thing in the article, but little Pepe dominates the crypto market in 2025. So I don't think that those types of things are going to go away necessarily. But you can see very much so that like media in crypto is super over diluted with like, here's this thing about this utility driven ecosystem, and now here's little Pepe is actually going to dominate. And it's not about XRP. It's just, how can we pay to get little Pepe in a crypto article and potentially get a couple of eyes on it? Oh, let's put XRP and Ripple in the title and then drop little Pepe in there as the kind of the lower thirds of the article title, which is just crazy. XRP will account for 14% of Swift's transaction volume. So this I saw coming out of the back end of Apex. I will say take all of this stuff with a huge caution flag, just in the way that this stuff is represented. So I'll play the clip that was circulating, and then I'll just kind of give my thoughts on it.
5 years. So, I mean, it's for a dumb reason. Today, there's two ways to think about Swift. There's a messaging, there's liquidity. And liquidity is owned by the banks. I think less about the messaging and more about liquidity. Because if you're driving all the liquidity, that's good for XRP. Anyway, so I'll say 5 years, 14%.
So 14% of Swift's payment network within a 5-year time span, which puts us right out to the end of the decade. And you can see here XRPL in the video. Like if you go and scroll through some of the other posts that, people are trying to get likes on, and nothing against that. It's just taking stuff out of context. They directly just say XRP. They don't say XRP Ledger. Brad's 1,000% talking about the XRP Ledger, which I think is kind of par for the course across all these networks that are actually being adopted. At the end of the day, like I kind of had a shift mentally a few years ago, like what is the actual value of the infrastructure of these networks? Like once we start having, if all real world assets are going to be tokenized, and I believe that the majority of them over given enough time probably will, you have to start asking which networks are they going to, interoperate with, whether that be from a data standpoint for making sure you're capturing data from a client compliance standpoint for what happens with these tokenized assets, whether that be from a speed and liquidity standpoint, pathfinding liquidity across these networks. So I kind of had this like thought process of like, yeah, it's great. Like, and I think that there's a byproduct that will happen for these unit of account based assets, like the native assets on these networks, like the XRPs and the HBARs and all the other stuff of the world. But like, really, what does it mean for the network itself? Like, what is the value of the actual infrastructure itself? Yeah, there's going to be cascade effects for these digital assets, but I don't know. My head just maybe goes in a little bit of a different direction. But you do see a lot of posts that are just like XRP is going to take, 14% of Swift volume. It's not really XRP. It's like the network, and then it's whatever the incumbents decide to use to settle or do whatever they want to do on these networks for payments sake. And maybe it's in a stable coin, or maybe there are partial payment and settlement flows that run through XRP for certain reason. Maybe it's the last mile stuff because there's not as much liquidity in like exotic jurisdictions, like some of these countries. It's really hard to get money in and out of from a payments and settlement standpoint. So like maybe that's where XRP fits in. But I would just, caution, some of the stuff that we see with price predictions saying 14% of Swift's annual transaction volume divided by 365 days, XRP price is going to be this, because it's just not the way that it's going to happen. To put into context what some of those numbers are for Swift, as of 2023, Swift facilitated an average of 47.6 million messages. So we're not concerned with messages so much. For additional context, you can go onto Swift's Knowledge Center. Digital assets and blockchain and crypto are like already integrated for certain things, or at least digital token identifiers are. I think in November of this year, the MT, which is like, pre-ISO 20022 stuff, I think is kind of being sunsetted in a way, and the MX goes live in November, which is 100% digital assets, blockchain wallets, all that stuff. But anyways, For comparison, in late 2020, transaction volume. Earlier estimates put its annual transaction value for SWIFT at around $150 trillion. It's important to clarify that the value of payments sent over the network, not what SWIFT holds. The network acts as messaging, relaying payment instructions, and banks on the front and back end of these transactions usually, hold certain amounts in Nostro and Vostro and do, the payment end of things. So really it's disrupting that. And if you think about 150 transaction or 150 trillion in value on an annual basis, and you break it down, even ChatGPT is giving me XRP's 14% share. If what Brad says is actually something that he actually said at Apex, because I was questioning that too, and the XRP Ledger, or let's say Ripple, which means I would assume that they're still using XRP Ledger by 2030. XRP Ledger would essentially get $21 trillion worth of value. That would be a daily equivalent of around $57.5 billion, about 1.75 trillion per month, which is still absolutely massive. I mean, that's a lot of value moving on a distributed ledger. We were thinking about, how far this technology has come. Before we were thinking about banks kind of using XRP as a bridge asset, and yeah, XRP can still be used as a bridge asset in certain regards, but now we have RLUSD, and now we're kind of talking about infrastructure of the network itself. And I do think that a lot of these banking institutions are going to issue their own stable coins. We've seen this stuff. We've seen some of the biggest banking entities in the world literally saying that they're working on their own stable coins. So which networks, which ledgers are they going to operate on? What does that potentially mean as kind of a cascade effect into some of the native assets on these networks, like XRP for the XRP Ledger? It'll be interesting to watch. If we assume XRP is used as a bridge asset, which I wouldn't directly make that assumption, 119 or $57.5 billion worth of XRP per day would be moved, 480 transactions per day per XRP, $480,000 in XRP per day moved. I wouldn't take ChatGPT, what it's spitting out there, as gospel, because there's so many different factors involved. It's still huge. $21 trillion annual volume, if that comes to fruition, taking out of Swift's market share, is massive. And then what I would expect to happen is the same thing that I talked about with RWAs and tokenization, and it kind of being a drop in the bucket. If we start seeing a network, literally take like XRPL, if it actually takes 14% of Swift market share for payments, that is huge. And I don't expect that 14% number to stay at 14%. So found that pretty interesting. The Genius Act passed. And this is kind of what ties a lot of this stuff together in crypto. From the technologist standpoint, and a lot of these people that are working on making it easier to onboard people into crypto, they talk a lot about account abstraction, making the user experience, as much as possible to feel like you don't have to interact with or know about how to interact with a wallet or do X, Y, and Z to engage in, the digital asset landscape. What I think is kind of what is actually happening or going to happen very, very quickly now that this act passed is you're going to start kind of seeing stablecoins represent that kind of eliminating of the barrier to entry for people joining this space. Think about it. Like, people are just comfortable using US dollars, using a credit card or a debit card. What if they're using the same thing that they're already comfortable with, and it just so happens to be a stable coin? And they start kind of understanding that that's happening, and that, it's basically like a US dollar. It's just happening digitally, X, Y, and Z. It becomes a much easier way for people to onboard into this space. It gets them comfortable with the technology, or at least at a bare minimum curious about the technology. And we saw there from the European Parliament that this Genius Act is extremely crypto friendly. So I think it's pretty interesting what we're kind of seeing across the board. If you guys are interested in checking out, man, when I talk that much in a 25-minute period, my voice dies. We've done some articles on some of the other policies getting through the U.S. We've done an article on the Genius Act too. Go to genfinity.io. But European Central Bank putting out European market for digital assets, digital capital markets union from the onset as kind of a long-term goal, should really open a lot of eyes as far as what's going on globally. And then you kind of see the same thing, European Parliament putting out this document saying that like literally the base case scenario for stablecoins in 2030, let me see if I can find it real quick before I end this. Estimating stablecoin price 2030 1.6 trillion, and the bull case 3.7 trillion. You saw, you know, Department of the Treasury, like I posted about it a month ago, about 3 trillion by 2028 is what they're saying for the bull case. So I think that stuff's going to get really interesting. I know we keep saying that and everybody's just kind of bored, and trust me, I get bored too. But at the end of the day, we kind of have to kind of zoom out a little bit and actually watch what's going on here, because if there's a $3.7 trillion market cap for stables by 2030, I just have to wonder what's the market cap for all of crypto by 2030, because it's certainly higher than $3.7 trillion. And now you kind of see, like I mentioned, Brad Garlinghouse even mentioning, you know, assuming that's a legit video from Apex, that the XRP Ledger or Ripple Payments is going to potentially take, you know, either or, whatever context he's putting that in, XRP Ledger, let's say. If XRP Ledger ends up taking him saying 14% of Swift's market share by the end of this decade is a crazy positive and bullish thing. It's like I've said, like we've seen a kind of shift from these individuals over the past year and a half. Brad Garlinghouse, some of the leaders like Lehman Baird, who I've interviewed from Hedera probably a handful of times, saying that everything's going to be tokenized. I remember doing interviews with him back in 2022 and him not, you know, saying that back in 2022, at least when I was interviewing him. And almost every interview I've done over the past year with him, or year and a half, he said that. So yeah, it's interesting. I think that there's probably a lot of stuff that we, for the publicly accessible stuff that we've been able to find, like the DTCC patent, 2 patents, or patent applications, I should say, about like a hierarchical wallet structure and tokenization of basically everything DTCC deals with, which is like global derivatives. So for all the stuff that you can find publicly, you know, if you do some deep diving, I always just have to wonder like how much is out there that like we can't see, because I know that there's tons of NDAs across the board for what's being actually tested, what's, you know, potentially about to come. And if they're saying this stuff in public documents, like as far as, you know, European Central Bank putting this stuff out and putting images out, you got to wonder what they're talking about behind the scenes, because I'm sure it's just absolutely bonkers. So anyways, I hope you guys enjoyed this video. I know I ranted a bit. I should mention, let me go to our profile on Genfinity at least. So doing a podcast tomorrow, getting into the weeds with some of the builders on the Hedera network. And there's a good cross-chain space between Hashpack, Constellation, XDC Foundation, Joey Wallet on XRPL tomorrow afternoon as well. This was a really good interview. I did this today. One of the more interesting use cases leveraging the Hedera network, which is like Sealcoin and YSAT and all the stuff they're doing. So they've like deployed physical chips into satellites, so like DPIN, decentralized physical pin infrastructure networks, if I got that right. So on SpaceX satellites, and like they're basically transactional Internet of Things, which I think is pretty interesting, because I think a lot of the times in RWA land or crypto land, we talk about like low-hanging fruit, like treasuries and bonds and private credit and all that stuff, which are massive, but we don't talk about what this technology is going to mean for data. Like think about how much data is out there in the wild. Think about the need for like data provenance and like data authenticity and data accuracy, especially with like the rise of AI and generative AI. You know, I think it's going to be kind of wild. I do look at data as a real world asset. And I do think right now it's all siloed, and just like all these banking and financial institutions have all their stuff siloed. I mean, it's the same, literally the same thing with data. What's that going to all represent? Like, what are we going to be looking at when we think about how some of this stuff's even intangible to even figure out some of the numbers around of where we could be potentially getting to, like zoom out and look 10, 15 years from now. I forget who I did an interview with you know, I know I see a lot of kind of polarizing crypto videos on like the greatest wealth transfer of all time. You know, that stuff's polarizing, but they're not wrong. Like that stuff is happening. Like there does have to be this shift. Like there's so much converging technology wise. There's so much changing infrastructure wise within like the traditional financial landscape. And that's going to have like cascade effects into literally every, like I fervently believe that distributed ledger and blockchain interacts with our daily lives. And when I say daily lives, it's not just financial use cases. It's healthcare use cases. It's, you know, the attention economy stuff that nobody's nailed yet, as far as, you know, when we use platforms like Twitter or platforms like YouTube or whatever, there's a reason those platforms are free. It's because we are literally the product on those platforms. I do think that when we talk about like data democratization, that comes into like our attention span. And then what is our attention span worth? Because Twitter and YouTube and everybody else, they certainly know what it's worth. But it's going to end up being like, we're going to be the ones that get monetized from spending time doing certain things. So that I believe 1000% will happen. The importance of like managing our own digital identities and making sure that that stuff is authentic and having the security included in that is 100% going to happen. And all this stuff can interact with these distributed ledgers and these blockchains, and or at least a select number of them. So it'll be really interesting to watch what happens. I know I kind of ranted and rambled here, but I thought that this was a pretty worthwhile video to make. I'll try to do a video tomorrow. I mean, as you guys have probably noticed, last month I did like one every day. It's hard to find stuff, and if I don't find stuff, it's hard for me to make a video because I don't want to just sit here and bullshit over nonsense for 30 minutes. So European Central Bank, European Parliament, I thought that was some legit stuff to present to you guys, and I hope you guys enjoyed this, and I'll talk to you when I talk to you. Thanks. Bye.